We have Merel Kraaijenbrink. She's COO of Dealflow, and we will be talking about the role of family offices in venture capital. But before we go deeper into that, Merel, please tell us a little bit more about Dealflow.
Yeah, of course. Happy to do so. Dealflow is the platform for European innovation. And what that means is that we connect investors, startups, corporates, but also families, family offices, bring them all together and really with the mission to make EU-funded startups more visible and to drive European innovation forward.
Yeah, wonderful. And the idea for this conversation is to focus a little bit more on family offices, no? And they are often described as this quiet capital in venture, and it's quiet but very needed capital, right? So what is changing, or what can we do to change this and make this, give more visibility to family offices as a strategic partner for venture capital funds?
Yeah, so indeed, family offices are, especially in the past, were traditionally known as more discreet style of investment. And you saw them in like traditional asset classes such as real estate. But I think family offices are changing themselves as well already and becoming more visible. So what you see is that indeed first they were more active in traditional asset classes, and now they're shifting. They're shifting towards more, I would say, loud forms of capital, which venture capital is one of them. And I think this is due to the fact that there's a new generation, there's a need to diversify. And family offices have the luxury and the flexibility of switching between their investment strategies. And so I think they're becoming more visible just purely from them slowly dipping their toes into venture capital. I think a good example is the Arnault family from France. They're known for their luxury brands, but they're now also investing in media and tech. And they're doing this in a very hands-on way. So no longer just quiet capital. They're sharing their network, they're sharing their resources. So they're becoming more hands-on investors, and therefore they're increasing their visibility.
Okay, they are increasing their visibility, but still we need more, right? So what can we do to actually bring more of this quiet capital, or you can say loud capital now, into this venture capital ecosystem?
Yeah, so I think what we're seeing now within family offices is that they're, besides just looking for financial returns, they're looking for investments that also drive impact or that are value driven. And I think talking to family offices that have their values, for example, they're focusing on sustainability, like the Rockefeller Foundation. So GPs that are focusing on those industries, I think those are well positioned to pull the family offices into venture capital.
And what is the role of Dealflow in trying to build this, bridge this gap, between family offices and startups and the venture ecosystem?
Yeah, so good question. As family offices are starting to invest more value driven, I think also the market is changing. Family offices are becoming more active with co-investments, direct investments. So what these family offices are looking for is really a partnership with those GPs, and that requires trust, right? You don't marry just anyone, and I think investments, especially co-investments, are often seen as a marriage. They definitely last longer than some marriages. So what Dealflow does is really bring together family offices and GPs to build trust in person. So the Dealflow Family Office Forum in September is a good example where we're doing a small scale event with family offices, with trusted GPs, where they have the time to get to know each other and to see if not only their financial return expectations align, but if also the GP investment strategy aligns with the family's core values.
Dealflow works directly with the European Commission, right?
Correct.
So we can say that having this activity in September is also like a proof of the intention of the public entities to also bring together these private actors, not to create a real ecosystem, which right now in general, venture capital relies a lot on public money, So the idea is to okay, let's make the cake bigger, but bigger bringing in private money as well, right? Or what's the involvement?
Exactly. So to bring in more private capital, and we talked earlier a little bit about trust and creating trust. I think for family offices that are looking into going into venture capital, it's probably not yet their core business, that they need to trust, and maybe they don't have the resources or the knowledge yet on venture capital investments. And a player like, for example, the EIC does have this. They have a very rigorous due diligence process. So family offices that are looking to, dip their toe into the water into VC, actually looking into those companies that have been backed by the EU, that have that seal of approval, would be a really good starting point.
And in terms of education, I think the word education might sound too much, but there's because trust is one really important component of this, but then there's this other component that it's about awareness and knowing the asset class, right?
Yeah.
So what do you think Dealflow can do to improve this,
No, exactly. And that's just one of the reasons why we're not just connecting people, but we're also hosting these like family office forum, because it gives us the opportunity to bring in, world-class experts to teach the family offices, like, what is venture capital? How do deals go? What are the expectations? So really we can create awareness and education during those days. Yeah.
And looking forward, what do you expect? Because where do you expect to have more impact in terms of like family offices, like geographically speaking? You want to bring all European family offices together? Do you have any geographic focus? What's the idea for the future?
The idea for the future, we want to work with all family offices in Europe. Like, it's driving European innovation forward. And I think family offices, no matter in what geographic scope they are, can bring, besides capital, also resources to the company. So I think no discrimination in terms of geographics, but I think the field that I expect family offices are going to be most active in will be deep tech, climate tech, sustainability. So those fields that either take a long time to, yield returns, or those fields that really align with those family-driven values. Yeah.
Have you seen a change because it's about generations as well, right? And so these new generations of wealth owners, they are more keen on taking risks, no? Have you seen this, like this?
I think so. I think my experience so far with the family offices is that then I talk to a son or a daughter who's like, my father or my mother is looking into starting to invest in VC. Can you help us out? So I definitely see the younger generation reaching out to us to kind of open the door to their parents or maybe even their grandparents. Yeah.
So you were talking about trust, no? But when you talk about, in general, this industry is about networking and trust, no? So
Yeah.
what would you say makes a family office different from any other type of LP?
So I think there's many ways that family offices different from, let's say, traditional LPs. So we're seeing family offices have the luxury that they don't have set timelines. They don't have predetermined exits. So that makes already the investing game much different, because they can invest in those fields that take longer to yield a return. So that's one. Two, what I really like that I'm seeing is that family offices are becoming more hands-on. They're becoming more active investors. So they're not just delivering the capital, but they're also sharing their network, their resources. Like, some have literally generations worth of knowledge that they can share with the company. So that is, I think, a big difference to your traditional LPs or your funds to funds that are seen as, here's some money and now you go. I think family offices stay on more and create longer partnerships.
And what do you think about family offices investing direct versus investing via funds?
There's pros and cons to each of it. I think if a family office is investing in an area that they are very knowledgeable about, for example, the Walton family investing in e-commerce with their immense experience in commerce, it makes sense to do a direct investment. They're comfortable in the industry, they're comfortable with what they're doing. But if that's not the case, and it's just a family office trying to diversify and they're not specifically knowledgeable in a field that they want to invest in, I really recommend investing in a fund. I think LPs and GPs, or family offices and GPs, can really complement each other. Besides the family offices bringing the capital, as I mentioned earlier, they can also bring their network, their resources, and the GP is on their return are bringing the deal flow, the analysis, the knowledge into sourcing. So,
do you think there was something done wrong in the last years? Because many family offices started to also get very enthusiastic about this asset class, and went all in. and lost a lot of money, right? And that's one of the reasons why some of them are very skeptical about this industry. And so what do you think? What can we do actually to bring them back?
Yeah. Good question. I think let's go a bit to your first point that they lost a lot of money. That unfortunately is a bit the game of VC as well. That lots of companies will go under, and of course, hopefully, you have a couple fund returners. And this is inherently different than real estate. I mean, it couldn't be more opposite, where you're expecting stable returns. There's value in the asset. So I think this also influences the way, coming from like a more traditional asset class, it really influences the way family offices look at returns. And yeah, I think this, to get their trust back, work with a partner, get to know them first, work with a GP, get to know them first, meet in person, go to events like 0100, go to, the family office forum, get to know your GP for a longer period of time, check out the investments that they have done, and build trust, and then invest. Don't get caught up in, oh, we have an exciting deal now and you have to jump it now. No, take your time. It's not the US, it is Europe. There's still time in the investment process, so no need to rush. If it feels good, it aligns with your values, it aligns with your financial return expectations, then step in.
And what do you think about the interest that we have been seeing that's racing? Okay, because in general, we know that our funds and startups that are in like growth stage, they go to the US to look for money, right? But do you see any interest from American money, American LPs coming here into Europe to invest?
Yeah, I mean, this happens actually a lot. Like American LPs coming to Europe, often able to offer higher valuations. The problem is, it's not per se, it's for Europe, it's a problem. For the US, it's good. Is that because there's more capital available in the US investors invest in a European company. And then often what we see, unfortunately, is that company then not just expands their market into the US, but actually moves the company to the US because there's just more market opportunity, there's more funding available. So it's a better choice for the company. And this is a shame for Europe, because when a company moves, we have the risk of a brain drain, IPs that move countries.
Yeah, and also because that company probably on its early stages was funded with public money, right? So in the end, it's like, okay, we're even losing our investment.
Yeah, exactly. You're in that way, you're absolutely losing your investment, and this is a risk that I think European Union at least is very aware of. They've now recently launched like a step program where we're seeing ticket size go up from 15 to 30 million. So we're going more into the Series B, Series C territory, which I think is a first great initiative, but should be first, and there should be more to come, because we really see that there's a gap in the market in Europe, Series C and onwards, and I think government institutions are very well positioned to fill this gap.
And what do you think about the high net worth individuals, which is another like a LP that is gaining attraction in, like, we want more high net worth individuals investing in this asset class because they're similar to family offices, but even better, because okay, they might have smaller tickets, but on the other side they have this agility, they are more agile.
Yeah,
and we really need that in order to make deals.
And so what I've seen, at least over the past years, that we really see an increase in high net worth individuals investing in venture capital, but indeed it's not per se a problem, but the problem is that their tickets are smaller, and we have, I don't want to say enough because never enough, but like in terms of like seed, Series A, we're quite okay in Europe, and what we really need to focus on is those later rounds to avoid that we build all of this in Europe and then we still lose them because they have to go abroad for their Series C plus funding.
Yeah, but in the end, that could be solved. Well, we do need more, but that's also that reflects also the number of VC funds that we have. We don't have that many growth VC funds either. We are very focused on seed, so on pre-seed, seed. So I'm thinking that if we have more high net worth individuals willing to invest in growth funds, but so maybe how can we make sure there's more growth funds here in Europe?
More growth funds. Yeah, maybe cultural change. No, I think the government should start first, like subsidize or do part of the ticket of those larger rounds. And then I think it would be comfortable for either family offices or for traditional VCs to fill in the other half, maybe get more comfortable with spending larger amount of money and then from there grow. I think also some maybe regulatory changes where we free up, for example, pension funds to invest a larger part of their capital in more riskier asset classes such as VCs. I think that would also be a very good step forward.
We're heading there, right? I mean,
we're heading there. Yeah, it's slowly, but we're heading there. I hope so.
Wonderful. Well, good luck with everything, and thank you very much.
Thank you so much.